So David, you were taking a look at the mortgage REITs. That includes Annaly Capital, American Capital Agency. They were down today. There was an announcement from the Fed last week that they are looking to move away from QE or starting to wind down QE. What does this mean for the mortgage REITs?
Right. Well, it's not really a big surprise. The mortgage REITs, they've been trading lower for a month or so now. Once American Capital Agency, they reported first quarter earnings. It was disappointing that some of their holdings had declined in value because interest rates started to tick up, or the anticipation of interest rates starting to tick up. So it's interesting to see because it kind of highlights that when interest rates were low and everyone expected them to stay low, it was kind of not a great environment for these companies, but there wasn't a lot of uncertainty about what's the future going to bring. But now that there's this, when are rates going to rise? When's the Fed going to wind down QE? It's starting to cause some uncertainty, and you're seeing that in the stock price.
So the QE, and in particular the mortgage bond buying, how does this impact the mortgage REITs' balance sheets?
Right. So a company like American Capital, they've seen huge growth in this market. They've been expanding. So there's a lot of activity in this space. So the Fed's in there. They're buying bonds, and when they buy those bonds or those MBS, that's going to drive up the price. So
supply demand.
Exactly. They've been buying these MBS, these agency MBSs, and now they're at a pretty high price. So when there's worry that interest rates might go higher, the prices on those bonds that they're holding will go lower. So that's where the concern's coming in.
Gotcha. So now, investors in these stocks, should they be worried? I mean, particularly if they're looking long term, should they be concerned about this?
I think there is some concern that you should have, but I don't know if it's I got to get out now before everything goes down. I think if you're invested in this segment or in this sector, and you want to be there for a while, I would say hold on. If you maybe a strategy could be to stop reinvesting the dividends that these mortgage REITs pay out, if you kind of want to dial back some exposure to those companies. But long term, when interest rates do rise, if it's a steeper yield curve, the companies they might start to perform well again. You can see that dividend come up. So long-term investors, there's going to be headwinds. It's kind of a binary. Will interest rates go up? Will interest rates go down? But if you like these companies and you like that dividend, I would say don't try to jump in and out and stay in there.
Great. Sounds good. Thanks a lot, David.
You're welcome.